Plenty moving this week. Lots happening, particularly as far as central banks are concerned. We also get a read on inflation and global equities in focus too as we begin our own earnings season and the US continues with its quarterlies as well. Peter McGuire joining us from XM to get across it all. Pete, a very good Monday morning to you. It is a big week, not the least, of course, being what we're going to hear from the central banks. What are you watching?
Well, good morning, Andrew. I think it is. It's truly a wonderful week. Great week for trading. And I'll be looking at the central banks, naturally Bank of England, Bank of Japan, the Fed, what policy is going to be. I think you could see maybe a rate hike, a rate cut, and I think the other one will sit pat. So that seems to be the general theme of things. And I think it's going to be a very, very exciting week.
All right.
Great opportunity.
Yeah, absolutely. Well, let's just summarise where we're at the moment. We'll bring up your daily performance chart here, those that are moving in the right and wrong directions. What are you seeing?
Well, you know, the Aussie's been all over the shop and it's back, still languishing at that 65.5. There could be a little bit of momentum there. I wouldn't be surprised. It's possibly a little bit oversold. Gold's also had a bit of a rally to the upside. It was very heavily sold off, and it's, again, you know, very whipsaw-y sort of trading opportunity. New Zealand dollar follows probably the same as the Aussie in a lot of ways. And then you look at, as far as dollar index, sitting flat. Crude oil, great market to short at the moment. It's been a good market to short. And that euro pound also offered a pretty good opportunity also. So, you know, from a cross rate perspective.
Pete, taking a look at the yen, been under tremendous pressure. Is that about to change? Look, a lot of speculation about that intervention we're getting from Japanese authorities at the moment, but also the prospect perhaps the Bank of Japan will in fact lift rates this week.
Well, there could be, Andrew. That seems to be, that's the first part of the equation. The other part naturally is, you know, from a bond buying perspective, are they going to taper back? They're currently, it's about 6 trillion a month. So is that going to be halved, and how's that going to move? It will impact the markets. And then naturally from a policy standpoint, hiking rates, you might see, you know, another 10 basis points. So, you know, again, the jury's out. We've seen big moves on the yen over the last couple of weeks against the dollar. Everyone's been, you know, riding that trade, and it's just been a glory trade. So when you're sitting at the moment, you know, the best part of 154, it's a long way back from that 162 handle.
Pete, elsewhere, of course, all eyes will be on the Fed. Look, expectations, they are going to stay where they are. They're looking further to September, where markets, it's almost 100%. They price that in now, a rate cut.
Yeah, exactly right, Andrew. I think that's, you know, every trader's mindset is going to be, you know, push it out to September, and that's where it's baked in. So that's the reality of the matter, unless something happens dramatically over the next, you know, month and a half. They'll look at the numbers. They're naturally, you know, checking as far as global growth, inflation. You've got NFP on Friday, of course, non-farm payrolls, and they probably know what that number is already. So it's, a bit of argy-bargy, and we've just got to sit through it. The US equities are fairly wild and rocky at the moment as far as, you know, volatility. So that's, I think it will continue into August, and September and October could be hot.
Elsewhere, the Bank of England also making a decision, although likelihood that it's going to stay where it is.
I think so. I think they'll sit pat. That seems to be the general consensus, Andrew. Though they've got inflation pretty much under control, they're still worried naturally from a GDP perspective as far as growth. So I wouldn't be surprised again, you know, late summer, early autumn for the Poms to have some form of rate cut. I think they'll go in probably, you know, lockstep in a lot of ways with the Fed. So let's just see how that plays. Again, it's been range bound, that pound hasn't done a lot from US dollar pound perspective. There've been other better cross rates to trade. Yen versus pound has been a screamer. So don't just think it's all US dollar.
No, indeed. Pete, meanwhile, across the channel, what are we seeing in the Eurozone at the moment, and how that's been reflected in the euro?
Well, Andrew, you got, you know, flash PMIs coming out, and I've just made some notes on that, you know, GDP and CPI data later this week. So all of that needs to be really considered. And so that's why I'm saying it's such a dramatic week. The next 5 days, I think, will offer much excitement for traders. And hold on and hang on to your hat, because it could be windy. And don't know. I mean, the Eurozone, Andrew, was a mind all of its own in a lot of ways, from a rate perspective and, of course, GDP. Inflation is certainly heading in the right direction, but it's just, again, do we see another 25 basis points in trio with the Poms and the Yanks in September?
And Pete, the focus locally this week very much on that quarterly inflation rate. It's going to be critical, isn't it, just as far as the Reserve Bank thinking is concerned?
Yeah, it's gone the other way, Andrew. That's the unfortunate side. With Australia's inflation sitting at 4% year on year, that was in May. Let's see what that number's going to produce, because that will dictate policy. And I don't want to say it, but imagine if we have a rate rise and they look at that and they go, yep, it's going the other way. So it's, we've just got to sit here and see what the numbers are like. There's a lot of hurt on Main Street in Australia, Andrew.
There is indeed. Of course, we're likely to see that reflected, that decision. But does it stay? Does it actually hike? That'll be reflected very much with the Aussie dollar.
Absolutely. 65.5. It's been languishing. I mean, it goes back up to 66.5. You think it's on a run, and then all of a sudden, it's the wind drops out of it. So it's been an extraordinary market to trade over short term, and that's what many traders do. They don't marry a trade. You're not in it for 50 years. You might be in it for 50 minutes, or a stretch maybe 50 hours. But they're very, very short term opportunities, and that's what traders like, Andrew, all across the world.
So
they look for opportunity.
Yeah. Well, of course, when you're seeing that volatility there, that's good for a trader's perspective. Pete, though, why has the Aussie weakened substantially just recently?
Well, I think it's a couple of things. I think first off, you've got to look at China and what the impact is there, and they're really having some major structural issues. We saw the prime rate being raised last week. So I think first off, China. Secondly, you've got to look at where the US dollar's traded, and that seems to have been relatively strong over the last month or so. It's back a little bit now, but I feel as though, with the Fed policy, they didn't change rate policy, a month or two ago. So I think that was the opportunity there, and the Aussie just seems to be languishing. I mean, the equity markets are doing, relatively okay. But the currency, you're being crushed.